The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, traders, to the new Power Trading Hour at 2 o'clock Eastern Time. Now 3 days a week, but soon to be 5 days a week. We're going to have a lot more things like guests, like we had last week. In fact, we got a new guest that we will announce today on the 18th. But we'll have a lot of stuff going on. It is a beautiful Monday, July 9th. And by beautiful, I mean it's wonderful weather if you're a duck in Clearwater, Florida. The headquarters of technical trading and investing, TFNN, Tiger Financial News Network.com. Today is International Town Crier Day. Long before Gutenberg and his mysterious printing press, most people were pretty ignorant. Of course, couldn't read either, even if they would have had a book. But, morally by choice, not in situation and circumstance, it was really low, and people just couldn't read. So when the man needed to tell his subjects what was going on and inform the common folk, those lowly cannon fodder types out there, about the news, they'd send out a flyer. They wouldn't send out a flyer. They'd send out the town crier. And old Mr. Town Crier would ring his bell and tell everybody what for. A lot of times people didn't like it because most of it was, hey, taxes are getting higher. So what would happen? Very early on, this Town Crier thing, about in the 900s, was a big deal for the King of England into the 1200s. These guys didn't live too long. And hence the saying, don't shoot the messenger, because they did start to get killed a lot. Killing a town crier was deemed treason eventually and subsequently punished by death. So when you wonder about where that saying came from, don't kill or don't shoot the messenger, actually don't kill the messenger, I think is what it is. It comes from being a town crier in England, jolly old England. Why do they say that they're so jolly? They all look to me like they're drinking their sorrows away at the bar. But that's just me. Anyway, news vacuum this week. Not a lot going on. It's going to be hard for this market to get moving. We've got Alcoa. Yeah, Alcoa out after the bell today. Don't expect a whole lot from them. They've learned to disappoint serially. No big data points this week in the United States. No big numbers that really should move anything after the jobs number last week. We've got, consumer credit, maybe a little bit at 3 o'clock today, but that's about it. Central bankers are off this week. Everybody's gone on vacation. No big real meetings or summits planned in Europe. There was a tiny one today, but probably not going to move the market. There are no elections. U.S. earnings seasons actually technically starts this week, but it's actually fairly quiet. Next week it really gets started in earnest. Alcoa, like I said, out after the bell. I thought it was today, but it must be in the morning. And J.P. Morgan on Friday, about the two big ones this week, and then we actually start next week with earnings in, big deal out there. So kind of just a light and continued light volume days. We're going to have to get used to light volumes today. Last time I checked, 1.6 billion shares. I'm going to update that right now and see if we got anything newer here. 1.67. Very, very quiet, especially this little move back up off of 1351 when it was down about 1348 on the S&P cash. I had a little bit of a bounce, but very, very light, if I could say, vapor volume in the marketplaces right now. In the newsletter, I've got 3 short positions. Doing actually fairly well, especially when you compare it to the S&P. S&P's off about a 0.25%. I've got 3 shorts, all stocks in the newsletter. One was off about 3%. It's off about 2 3/4 right now. Another one off about 2%, and another one off about 1%. So having a good day, thoroughly outperforming the market, at least for today. Don't want to get too braggadocious, because you always know Mr. Market's there to humble you at any moment. What else do we have going on? A lot of news out there about Apple and their 7-inch tablet coming out there. Kind of funny when you really look at what Apple says and what they do. Almost always two different things, and I'll bring a story back in here that I've requited several times on the show. But October 19th, 2010, Steve Jobs said, "A 7-inch tablet is DOA." He scoffed that a normal-sized human fingers are simply too big to be able to accurately hit icons on a screen that size. Everybody must have a finger like a thumb, I guess is what he figured. I never really looked at his fingers. Maybe they were all thumbs. Anyway, in 2004, he said he'd never put video on an iPod. In 2003, he said Apple would do well to stay out of the cell phone business. And in 2008, on Kindle, people don't read anymore. This brings me to the first time that I stood between two titans of the computer industry. I think this had to be 86 or 85. 86, I think. Standing with Steve Jobs in front of me, and Bill Gates in front of me and Steve Jobs behind me, in line at the computer convention in Las Vegas. Steve Jobs is up at the counter, and I think even back then, this is mid-'80s, was complaining about the $2.50 hot dog. I bet they're $10 now. And complaining about the price of the hot dog, why Steve Jobs ad nauseum with a bunch of hangers-on from some magazine telling everybody why the Macintosh, which of course was black and white only at the time, and people really never needed color. Of course, they had a color monitor within a year. Basically, when you listen to these people, especially what they say their plans are, just remember it's all about sell what you got. And at that point, what was he? A year and a half away from getting thrown out of the company he started. I just don't put too much, especially into what Apple says. A lot of it is disinformation, outright lies. If they can get away with it, basically they're not going to tell you the truth. I don't spend a lot of time agonizing on it. But at least for me, almost 30 years later, it's not uncommon to see these guys have a generous, I always like the C-SPAN on Sunday night because they have the live debates from the English House of Parliament, the House of Commons, and they all argue at each other. But the one thing that they can't do is call each other a liar. They get tossed out. So they have 100 ways to call each other liars without saying the lie word. And the one I always liked the best was he had an economy with the truth. And I would just say that most of these guys, including Bill Gates and the rest of them, are more interested in telling you what will self-serve them, not really what's going to happen. So I wouldn't say Apple is two-faced. That was come from my mailbag. Actually, some of these questions come from my mailbag. You can always email me at path@tfnn.com or give us a call at 877-927-6648 and ask your question on the air. Of course, this is the first day that we're on at 2 o'clock, so just have to adjust your schedule to catch the live version or the archive version of the Power Trading Hour. Kayak, I've got a couple of stocks here I want to warn you about in IPOs. Kayak, I was trying to come up with an acronym for yet another travel company. Yet another travel company. And it's like Yahtzee? Could be. Anyway, Kayak first filed last in November. They actually have been trying to go public for like a year and a half. They've got 100 things that are wrong with this thing. They're trying to raise $82 billion to start with. My advice would be to stay far away from this one. It has every characteristic of going BK in the first year of trading. Another one which is even more egregious if it could be, is Auto Trader. I don't know what the status of this is, but the Auto Trader insiders are trying to go public and should be a lot of more interest in trying to shove out some of these IPOs over the next few weeks. Auto Trader's insider borrowed money to pay themselves a $400 million dividend before they've gone public. The car business has always been kind of seedy, and I guess you put .com behind it, and it's CD squared. But anyway, Auto Trader, another one you need to watch out for. No reason in the world I can think that these guys would borrow a bunch of money when they could conceivably make it in the IPO market if they thought they could. So I suspect this is nothing more than borrowing money up front, paying themselves, and then going to try to pay themselves once again when the stock goes out and is public. So two stocks that have my seal of disapproval right now in the IPO market. Where is my propeller head? I don't know if a lot of people caught it because it was kind of buried in the drive time news going home, but Best Buy is getting rid of 2,500 of their Geek Squad employees. And there's why your Geek Squad appointment has been delayed until never. The propeller heads, 2,500 of them, pretty much all gone. The Best Buy closest to me, actually, I'm kind of equal distant to about 3 of them. But the one that I drove by more often closed about 2 weeks ago. And especially I drive by on the way home. But it totally closed, but a lot of others are going to be getting rid of those people behind the counter and getting rid of their propeller heads. So no more technical support for you, sir. I guess it'd be the tech support Nazi. Microsoft's having a big deal in Toronto today. It is a kind of a mini convention of their OEM partners, people like Dell. And a few new things are coming out of this. Today they announced that Windows 8 will ship in October. It's RTMing in late August. That's release to manufacturing, RTM. That means that it takes about 15 to 30 days for them to ramp up. Steve Ballmer has been talking about having somewhere between 300 and 500 million copies of Windows 8 out within the first year. If that's true, $36, $37 in Microsoft, easily attainable. Not a big deal out there. So anyway, Microsoft also has purchased a company called Perceptive Pixel. These is a company of large multi-touch displays. Microsoft announced that today at their OEM Partners Conference in Toronto. What is this? You've probably seen a lot of these things on NCIS, what is that, Los Angeles, Poughkeepsie, whichever one that happens out there on the coast. They are making up to 82-inch multi-touch displays with full running Windows Quad and 8-core machines driving these displays for high-end applications. But going to be kind of interesting. We'll be back in a minute.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we get back, we're talking a little bit about Microsoft, what's going on with them. Actually, Steve Ballmer is kind of famous for having this 82-inch display right behind his desk in his office. But this company, kind of interesting. It really shows you how Microsoft's kind of trying to split off the tablet business to the very high end of the marketplace. I don't know what Apple's interest in that high-end, super high-end part of the market is at all. But, of course, their new Surface product coming out this fall. Production's already started on the Surface tablet that we showed, I think, on the Tech Insider part of the show a few weeks ago in Tom's hour, second hour on his Friday show. But it's the only thing that I've heard so far is production's going pretty good. They spent somewhere around $20 million for the tooling to actually make the plastic, and the yields are fairly low on that so far. So they may be a week or two later or late coming out with the Surface tablet, according to some Taiwanese news sources. But still interesting. Amazon's having a problem with robo-pricing. Think of flash crashes on their website. Excuse me. I've got just this horrible chest cold that I've had for about 5 days. Anyway, they have the exact same kind of problems. A lot of people are constantly monitoring the price of other products or the same product on Amazon in some of their affiliates. And some of these algorithms have gone insane, leading to prices that are somewhat ridiculous. Last year, a out-of-control algorithm inflated the price of The Making of a Fly. It's a genetics book that sold 150 copies to over $23 million. So they're having some of the same kind of flash crash issues. The more we get into this, the more we see that algorithms, not only in our daily life, but in markets and in business, are really starting to, almost be a self-fulfilling prophecy. Kind of scary out there, but Amazon seeing a lot of volatility in their internal prices just over the last 3 or 4 days. Again, looking to a problem that may be computer-based for their own robo-pricing system that they have set up. I was talking about our next guest scheduled on July 18th. It is Andrew Blum. He's written a book about a journey to the center of the Internet. We're going to talk to him again on the at the bottom half of the hour on July 18th. He has written articles in Wired, New York Times, the New Yorker, Business Week, Metropolis, Popular Science, Gizmodo, The Atlantic, Architectural Record, and Slate. He writes a lot of tech-centered articles, but kind of interesting if you've ever wanted to trade more internet-centric stocks. I think he's going to explain this in a very easy way. I really enjoyed the book. This is another one of the books that's finding its way to the beach this summer. Actually, one of the better sellers. Pretty good guest, and we'll have Andrew Blum on July 18th. So make sure and keep an eye on that. In the meantime, we've got a request from the Den. You can always put a request in the Den in an email, but I won't get to it until the next show. Or you can call 877-927-6648, and we can discuss it right away. We had one question to talk about Dolby Laboratories, and I can see what Ram Free and the Den has been talking about, and that is you have the classic pattern that you're looking for. Now, there are a few things that I would like to say about Dolby Labs, DLB, before we get started. One, I hate trading companies that are based on royalties and or patents. It is a lot of times trading just like a biotech company or a genetics company or a drug company, in that they are extremely quiet about what's going on internally. You don't get a lot of good upfront warnings in these companies. Normally, it just comes out. This original gap happened because Microsoft said that they were not going to renew the license with Dolby, and it was part of a strategy of negotiation. But Dolby had, a month or so of trading or more. Why they basically, Microsoft said, hey, we're just not going to license any of your stuff. That's when that took off, which is the May 7th. We're going to talk about how this comes back in and trading companies that are feast and famine based on news, but this is going to be one of them.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Anyway, we're talking about trade what you know, and kind of what I know about Dolby Laboratories. I think I did a couple of deals with them when I was a product manager. I kind of vaguely remember, talking to him about a few things and maybe licensing some of their technology that was in a chip. We had to pay them some money, but it was already in the chip we were buying. It wasn't a big deal. These guys work on royalties alone. I think they have 1,700 employees, of which about 3/4 are application engineers or straight-out engineers. The rest are sales and marketing and secretaries. So not a monstrous company, but all their money comes from royalties from other people selling their technology. What happened was a lot of people were shorting this stock, wondering if Microsoft would indeed relicense some of the technology they had for both audio and video playback in the next version of Microsoft's operating system, Windows 8. Eventually they did. But I think the day that spiked, they had almost a 25% short interest. Now that it's come back, I'm not exactly sure whether you're going to ever get that kind of huge pop again or a retest to the top. You may have a nice trade in this for a couple of bucks. It's hard for me to see. If you just looked at the chart, I'd say differently. But knowing the internals of this company and knowing that if you're going to get something, it's going to be these kind of heartbeat things where it all happens all of a sudden, just like this. Short interest continues to grow or something, and you get a nice pop out of it. But for me, it's not a stock that I like to trade. I like stocks that have more than a few customers. You tend to have a lot of leaks that way, a lot more people trying to either get in or get out before some big move happens. This is a company that is pretty good at keeping its secrets and why you get these huge moves out of nowhere. And I'm going to just say it trades more like a biotech or some kind of pharma stock than it does a traditional technology company, and that is because of the very few customers that they have. And I would much rather have a company that had a lot more customers out there and a lot more opportunity for advancing and decline news to actually hit before it hits the chart like this. So it's just one I don't like because of the trying to get through the news. Is it probably stable around here? Yes. Is it a great chart pattern? Absolutely yes. Is it something I'm going to trade? No, even though it's a great pattern out there. So anyway, we'll go into some other stocks, but just I hate this one in CRE and Panel and a lot of these other stocks that are either based on patents or royalties have a bad tendency to be more like Russian roulette than some kind of predictable game. And that's why I kind of try to stay away from those, especially since a lot of things happen overnight without any warning in those type of companies where their business model isn't a lot of customers, but very few. Anyway, we're going to look at some companies out here that look like maybe they've topped out. One of the ones we've been looking at here, I think I brought it up on Wednesday, maybe last week or not, Torchmark Corporation, TMK. Looks like it's pretty much committed now, coming back and filling this gap up that it had. I'm looking at the March 16th at $51, 1.7 million shares on that March 16th high. It has gone above it. It has gone below it. And given a decent sell signal, if you were long, you certainly would want to get out. I don't know if I'd short it. Certainly looks to me like you do have a fairly decent confirmation, and it's going to come back at least to 49.50 and try to fill this gap up, which didn't have, it had a little energy, but not the kind of energy that doesn't get filled. And of course, it's a 75-cent gap in this stock that doesn't have a lot of unfilled gaps over time. Pretty good indication that this thing's going to at least come back. But when you trade price and volume, these stocks actually give you a lot of information at the swing points. This one wasn't as weak as you'd like up at the top, but certainly giving a fairly decent sell signal in the marketplace. Been seeing a lot of real estate stocks or property stocks or ETFs coming up to these high levels. Very light volume, or at least just kind of the same volume. Starwood Properties is the next one we want to look at. STWD, and it's got two things. One, a long-term gap where it's coming up. Let me try to get up to it. It was on huge volume. This is the second real test back up into it on, what is that? On the, what is that going to be, May 11th of 2011. This thing came down on monstrous volume of 15.6 million shares, and it was about, about 75 cents. Pretty huge gap in this stock that's remained open. We're coming back into that, of course, 15.5 million shares, and now we're going to look at a little tighter shot at this. You came into it the first time on March 27th with 1.3 million shares. Got very close to it, and of course, gapped down for this stock fairly largely on about 1 million shares. So not all that much, but certainly didn't have anything approaching the 15 million share gap down. This has tried to come back into it again with about the same kind of energy, about 1 million shares on the 2nd of this month. We've gone kind of sideways here, but volume very light, and even today looks like we're going to have something like maybe 500,000 shares. I've seen so many of these real estate companies doing these kind of bounces back up and testing the previous high on lighter volume and coming back up to these high volume gap down days and looking at fairly strong resistance, at least in this housing sector. We're going to kind of have to keep an eye on those, but continues to be an issue with a lot of them. Again, you can give me a call at 877-927-6648. That's 877-927-6648, and we'll discuss your particular stock if you'd like. RPM International is the next one we're looking at here today, and it's another one that's kind of given its topped out signal here in the marketplace as we continue to pretty much be down about 5 points on the S&P, so no big movement here today. April 5th, it hit a high on RPM of $27.70, 2.3 million shares. We got over that on the 5th of July. Of course, that was a full day of trading on 50% of that volume. We've closed below that spike high, which could also give you a clear and defined sell signal on RPM International. And just so in my cold medicine-induced stupor here, that RPM International manufactures and sells various special chemical products to industrial and consumer markets worldwide. When these input companies top out, good time to at least take some caution out here. Of course, the one thing we don't have is volume. Volume has been very, very light. I'm going to update that and check the market volume. On the consolidated New York Stock Exchange tape, it's 1.83 billion shares. One of those days where it's, it's just, you can't say it's vapor volume, but I mean, it's getting awful close to that. I suspect we're going to see some test, and that test is probably going to come, I thought, either today, late today or tomorrow, of the 1342 on the S&P, where previous support has been. It's not going to be all that great of a support level. It's not going to take a lot of volume to go back through it, but I suspect we see that low tomorrow, and that's going to tell us whether we break it or not, whether we're going back to the 1295 on the S&P cash. I suspect we are. I suspect it's going to be on very light volume. I suspect it may take us 45 days to get down to the bottom, which may be 1250 or 1225. It may even be 1295. We may be going sideways here for a very long amount of time where we just bump down 2, 3, 4 points, up 1 point, down 4 or 5 points. Kind of the worst thing that a trader would like to see. But one thing you don't want to be doing on these markets that look like to be choppy is always, getting yourself chopped to death in these. The next stock I wanted to look at here today is LivePerson. It's made kind of a fairly short-term high, and this is not uncommon in the marketplace. I've seen a lot of these patterns. LivePerson, LPSN. Let's see. And what we've had in it is a nice little high out here on very, very light volume. The June 19th high, $19.25, 550,000 shares. We did go to $19.60 on July 5th on 210,000 shares. So another good test of the top on a very light volume. Of course, the next day you easily close below that. That is your sell signal. We're filling a gap down that came down on fairly decent volume of 800,000 shares. this is kind of like the chart I showed before, which was TMK, that I thought would probably have a good chance of filling that gap. But a lot of these giving pretty decent signals that they're at some fairly steep resistance, and there's very few people interested in taking the plunge and going higher. We actually have a real estate index fund out here that's kind of giving a little less than ambiguous signals. One thing you don't like to see is very light volume at the top. We were talking about a lot of real estate stocks giving kind of either light signals or even strong signals that it's time to sell depending on them. There's a couple that were strong, but for the most part look like we want to go back and test these gap ups that we saw in real estate not too long ago. But the IYR giving a pretty good signal came in 1 million shares, actually 1.6 million shares light. The May 1st high out here, $64.87, 7.7 million shares. You came in it with 6.1 million shares. In an ETF, I almost double the difference to compare it to your experience in an actual stock. But this one got to $65.19, so about 30 cents, 33 cents higher than the previous high. Did it on 1.6 million shares lighter. It has moved back down and closed below that high. You've got very light volume out here today, which means that we may have one more attempt at that $65.19 high. But what you don't like to see is indifference and super light volume at a previous high. My best guess right now would say that, or highest probability, is that the IYR is coming back in to fill, or at least test partially this gap up that happened on the 28th of last month. That gap between the 28th and 29th happened on 10.3 million shares. So you had a huge volume day. Volume's been, of course, dying down every day since then. And, with us, if that's anywhere close to right at 500,000 shares, 600,000 shares, suggests that the best you could hope for is maybe a sideways move and consolidation. The worst, most likely consequence is a gap back down into the, probably into the 62.50 to 63.50 range to test that heavy gap up. And that's where you're going to find some level of support. And if you are bullish on housing, I think that's the next opportunity to go out here and check it out. Another one in housing, my theme on housing today, is A.O. Smith. They make water heaters and sinks and a lot of the other things that go into new buildings. Another one that looks like it's kind of topping out here in all the brouhaha over housing and the housing marketplace. And why do I say that? Mostly because from what I can see on Financial Entertainment TV, we are seeing a huge amount of people talking about the housing boom. And what I see in the chart is a little different. The April 27th high, $47.94, with about 510,000 shares that day, bringing in the high. That's within a half a percentage point of the top. We came back in and tested it on June 19th on 330,000 shares. We tested on July 5th on 220,000 shares. We gapped down, continuing to have, 123,000 shares today. Went a little lower out here, but we're really setting up for what could be a fairly decent break in the marketplace. I suspect that it will probably be more of a paper cut, and that is just a little bit of loss every day, and maybe 3 or 4 days 50 cents down on a stock or something, 25 cents up on the one day. Maybe not the rip roaring, but maybe the start of a decent trend, but a trend that is slow and methodic instead of the wild volatility we've seen. Why do I say that? The VIX just really not running.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we have a caller, so we're going straight to Mike in Lakewood, California. How you doing today, Mike?
Oh, pretty good. How about you?
Pretty good. No swarms of locusts out there in California today?
No, it's actually the weather's, we've been lucky. The weather's fairly nice. It's warm, but not nearly as bad as the rest of the country. So,
one of my favorite shows of all time was the Rockford Files.
Oh, yeah, I like that one, too. So.
When they did the remake of it, the show was floods, riots, earthquake, I forget what it was. It was one of the 2-hour ones, but it was like every kind of cataclysm in the world out in California. But he still loved living on the beach out there.
Oh, yeah, Malibu.
Yep.
I'm calling about Microsoft, and I've been reading a lot and hearing various things about Windows 8 that it may not be as great as people think, and I'm just trying to get an idea whether Microsoft's a good price here or...
I've got it. There's two things that you need to know. First of all it is great. It cleans up a lot of issues. It brings multi-touch across both tablet and computers. It has a lot of neat features. One of them they announced today, you can actually run an entire Windows 8 system off a thumb drive. So you could go plug it into a machine that theoretically had a hard drive in it already, but a copy of your operating system and run it exactly the way it was.
Oh, wow.
Some pretty good features. The second part of it is they are killing off Windows XP.
That I know.
And XP has right now probably about 40% of all users are still using XP. And these guys are eventually going to have to upgrade. Balmer's estimates are somewhere between 300 and 500 million copies of Windows 8 in the next year. And I think that's all you have to look at. That's about what, the money that they're going to make off of it, which is about, I think it's going to be about $65 to $80 off of Windows 8, is the price range to OEMs for putting it on the machines.
Okay, I've got one other quick question for you. Got time about this same topic. What about the hardware upgrade that's going to be required to support Windows 8 as far as things like touchscreen, or if I don't want to have the touchscreen feature, can I still keep my old monitors and not have to buy all new computers?
I don't have a touchscreen monitor yet, but I've had the developer version of it since last fall, and it is very neat. It's well thought out. They hired a guy that had been in the Macintosh world for a long time to design the interface, and it's very cool. You've got people that are at the extreme edge of having to upgrade. You've got a new operating system that is very good. I've played with it. I think that this will probably be the last big upgrade cycle for Microsoft. But, everything they're doing now, including launching Xbox 720 this Christmas, and just all the other stuff. Literally, they're pushing everything they can at once.
Well, that's great.
So I think it's a $36 stock at Christmas, $37 stock at Christmas. A lot of it, if the wheels fall off the economy, don't hold me to it. But
no, I understand that.
But I'm thinking that if we're at 1,400 on the S&P, this is a $36, $37 stock at Christmas.
Would you start entering it now, or unless you already have, or?
I think you're going to get back down to probably just under 30. Maybe $29, 75 cents or something.
Well, I think this right now.
Yeah,
I think $29.90 right now.
Yeah, I think you can. I think this is going to go sideways until we find a bottom in the market. So I can't say that I'd buy it today. I don't think it's going down. If you're in it long term, I know there's a gal that calls in that's in it at about $25. I think you just hold on to it. But I think.
Thanks very much. I heard the music. I really appreciate your time. Thank you.
You bet. No, I think Microsoft has got at least doing everything for a while correctly. Anyway, it's a wonderful day. Hang on next for Ken Shreve, his first time at the 3 o'clock hour on Mondays. Normally it was Wednesdays, or Tuesdays and Thursdays. Anyway, we'll be back on Wednesday.